All right, let's get right into it. Today, we're going to pull back the curtain on crypto trading. We're breaking down 5 core concepts, but not from some dry textbook. Nope. We're going to listen in on a real conversation between professional traders as they spot a massive opportunity. Ready? Let's dive in. So, you're looking to get into crypto trading, right? But man, it can feel like trying to learn a whole new language. It's just complicated. But what if you could skip all that dense theory and just learn in a much better way? Well, that's exactly what we're going to do. We're going to analyze a real-time discussion between pros at a critical make-or-break moment in the market. This is where theory meets the real world.
And listen to this. One of the traders says, "You don't get this opportunity every week." Whoa. Right there, that one line just sets the stage, doesn't it? It tells us that whatever they're seeing, it's a big deal, it's rare, and we'd better pay very close attention.
So what was this big opportunity? Well, it all started with a decision to go long, to make a big bet that the market was about to go up. Let's break down exactly how they spotted their moment to buy. And here it is, the trigger. One trader says, "Bitcoin just hit a very critical position. I personally think this is its current bottom." You hear that? They're calling the bottom. They believe Bitcoin has finished falling and it's about to bounce back. But you've got to understand, this isn't just a gut feeling. It is absolutely based on a core concept in trading. And that concept is called a support level. Now, the easiest way to think of this is like an invisible floor underneath the price. When the price falls and hits that floor, a ton of buyers tend to rush in, and all that buying pressure can act like a trampoline, stopping the fall and hopefully bouncing the price right back up. Now, notice the specific words they used here. They didn't just see any support level, they called it a weekly support level. That little word, weekly, is a huge deal. It means this isn't some flimsy everyday floor, it's much stronger, much more reliable. So why were they so confident? Well, it all comes down to history. Because they had literally seen this movie before. Back on April 7th, Bitcoin hit a very similar weekly support level, and then it kicked off a huge rally. So now, seeing the exact same pattern repeat itself, they're expecting the same result. This is classic pattern recognition in action. So with that signal in hand, they decided to open a long position. This is the most fundamental trade you can make. Going long is really just a trader's way of saying they're buying something because they believe the price is about to go up. You know, the classic buy low, sell high. And boom, there it is. They put all the pieces together, the historical pattern, that strong support level, and they acted decisively. They all went long, betting on that price increase. But, and this is the million-dollar question, isn't it? What happens if they're wrong? Seriously, this question right here is what separates the amateurs from the professionals. A pro never enters a trade without a plan for what to do when it goes wrong. So let's look at how they manage that risk. First off, it's really important to know that pros can make money even when the market is falling. A long position, like we said, is a bet the price will go up. A short position, though, is the opposite. It's a bet that the price is going to go down. Yeah, you heard me right. You can actually profit from a decline. It's a more advanced strategy for sure, but it just goes to show you there are opportunities no matter which way the market moves. But whether you're going long or short, the single most important tool for managing risk is the stop loss. I want you to think of it like an ejector seat in a fighter jet. It's a preset automatic order that gets you out of a losing trade before the damage gets too bad. It is your financial safety net. But pros don't just use one kind of stop loss. They adapt. For a long-term trade, they might set a really wide stop loss, giving the trade room to breathe and ride out the bumps. For a quick trade, that stop loss is going to be super tight. And the slickest move of all, once a trade is making money, they move their stop loss up to the price they bought at. Now the absolute worst that can happen is they break even. It's genius. Okay, the other big tool in a trader's arsenal is leverage, and it is famously known as a double-edged sword. Put simply, leverage means borrowing money to amplify the size of your trade. Leverage lets you control a really large position with just a small amount of your own money. You might see a conservative trader use 3x leverage. More aggressive folks might go up to 20x or even 100x. But here's the catch. It amplifies your losses just as much as it amplifies your gains. This, right here, is how most beginners get wiped out. But let's see how a pro uses it. The conversation gave us a masterclass from a huge trader, a real whale. He didn't just jump in with crazy high leverage, no way. He started with a very conservative 3x. Then, as the trade started to work, he added more of his own money to it. And only then, once his idea was proven right and the trade was profitable, did he increase the leverage. You see that? That's strategic, calculated risk-taking, not gambling. And all of this brings us to the real secret weapon of a professional trader. And it's not some complicated chart indicator or a secret formula. It's all about their mindset. So we've covered a lot. Let's just do a super quick review of our 5 core concepts. This is your trading starter kit. You've got long and short positions for betting on which way the market's headed. You've got your stop loss, safety net, and leverage to amplify your results. And it all started with finding that key support level. And let's come back to that crucial quote from the beginning. You don't get this opportunity every week. I'm telling you, this line has more wisdom in it than entire trading books. Top-tier A+ trading opportunities, they're rare. And the professionals, they know this. Their edge isn't about clicking buttons all day long. Actually, most of the time, they're doing nothing. They're just watching, analyzing, and waiting.
Because true expertise is having the discipline to wait patiently for one of those rare A+ setups, like that weekly support bounce they spotted, and then having the confidence and conviction to act on it decisively.
So, as we wrap up this explainer, I want to leave you with one final thought. Think of it as a challenge to take with you as you continue to learn. The professionals we listened to were waiting for a specific, historically proven pattern. Amateurs, on the other hand, often trade because they're bored or they have a fear of missing out. So the question to ask yourself is this: what high-quality setup, what clear signal, what rare opportunity will you have the discipline to wait for?